Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium only video, so I hope you guys enjoy the content. We're going to be doing a full recap of basically everything the subscription has to offer. So I hope you guys enjoy it. This should be useful to people who are new and also for people who have been around a while because it never hurts, I feel like, to have a reminder of all the different things that you can use in order to help navigate the crypto markets. I generally like to do a recap video every 2 to 3 months because the market conditions can change so much during that time period, and so it's good to just get a handle on where we are. So the first thing I want you guys to look at is the risk dashboard. Okay, now this dashboard, there's some people have had a hard time finding it before. It changes every quarter or so. The actual link. So just remember, if you're ever looking for the dashboard and you don't know where it is, there's three places you can find it. You can either find it in the most recent email to you if you signed up through the website. You can find it through Patreon if you sign up through that, and you can also find it on the Telegram alerts channel. So all three of those places should always have a recent link to the dashboard. So what we have here are a lot of different assets. So these are the main five that I trade. So Bitcoin, Ethereum, Link, ADA, and DOT. And I like to only look at a few coins because I'd rather know the relationships between these coins very, very well than to speculate on 100 different altcoins, most of which would not perform as well as Bitcoin or Ethereum anyways. And the ones that do, they're such a long shot that the chances that you actually choose one that does that and you also cash it out at the top is really low. It's easy to look back in hindsight and find microcaps that can outperform Bitcoin, but a lot of times we like to look at where the low was and identically where the peak was. And presuming that you would have bought at the low and sold directly at the peak is likely not a rational thought, because who can really time that stuff? So remember, if you go altcoin hunting too much, there's a lot of opportunity costs in simply just not holding some of the bigger coins. So with that said, I do want to remind you there is nothing wrong with having one or two small cap projects that you guys enjoy. I myself have a couple. I mean, I don't talk about them. I don't want to move the market, but it's okay to have a couple of smaller cap projects that you're interested in or involved in, and it's more of like a community thing, right? It's a community thing, and you can watch the project go, or watch it grow. So what we want to do here is we first want to go through the risk level. So on this risk dashboard, you have this main page, and you'll see these five assets, which are the main five that I'm trading. These three are subscriber requests, but the confidence level on these risk metrics are really low. The reason is because they simply have not been around quite as long. They have not experienced any part of a bull market. I understand. I could go get the data for VeChain before the decimal, before they split it up, but I just haven't done that yet. And then we also have Monero, which is the privacy hedge, and then XRP and Litecoin, which typically I would say, as I've had before, would wait until Bitcoin is close to its prior all-time high. So these are the main coins we have on the dashboard, and these are the main ones that you will hear me talk about, but occasionally I'll give updates on some of these. Now, each asset has its risk against USD, its risk against Bitcoin, and its risk against Ethereum. So suppose you have an asset, say Link, and you're wanting to sell it, which I'm not saying you should go sell it, but if you wanted to go sell it, what theoretically speaking, to reduce the risk the most, you would want to sell it to the risk metric that has the highest risk. Highest, not lowest, because you have to think about it in reverse. Remember, if you're accumulating Bitcoin, you want to accumulate it at low risk. So less than 0.5, generally speaking. If you want to be more conservative, less than 0.4. If you want to be aggressive, less than 0.6. But generally speaking, you want to accumulate Bitcoin at low risk. So imagine if the risk of Bitcoin were 0.3, then that would be a good time to buy Bitcoin. However, with Bitcoin risk being at 0.6 against USD, that means that the USD Bitcoin risk would be 1 minus this, or approximately 0.38 or so, which means to reduce risk in Bitcoin, buying USD, so selling Bitcoin and buying USD, reduces risk. Now, we are still at a relatively low risk level, so I'm not saying anyone should go sell all their Bitcoin. I'm certainly not. And we'll go over the different strategies later. But this just gives you an idea of where we are in the grand scheme of a market cycle. These numbers can theoretically go between 0 and 1. So we're just over zero point 0.5. And if you look over here, you might say, oh, well, I could sell my Bitcoin to Ethereum as well. And you could. But note that the USD risk is higher than the Bitcoin risk. So than the Ethereum risk. So theoretically speaking, it makes more sense to sell Bitcoin to USD than Ethereum at these risk levels according to moderate risk tolerance approach. If you want to be more aggressive, that's completely fine. And if you find yourself wondering ever, I don't want to sell at the, I feel like it has a long way to go. I don't want to sell at this risk level. Then I would suggest you take on a different risk tolerance approach where maybe you start selling at 0.7 risk or 0.8 risk or something, whatever it is. That's the beauty of it, is you can tailor it to exactly whatever your risk tolerance is. It's not possible to come up with a one size fits all approach because we're all coming from different walks of life. We're all in different situations. Some of us are have very specific goals. If you're younger, maybe you have you're okay taking a bit more risk on, and you really want to build your wealth. If you're older, nearing retirement, you're probably looking to more so preserve the wealth. So you're here because you want to grow it in crypto, but you want to be as risk averse as possible and take profits because you want to make sure that you're securing those profits rather than taking on too much risk. So you can see how each asset has a different ratio. So imagine if you were to sell Link right now, you would if you were, then the thing that would reduce the risk the most would actually also be to USD. Okay, and I'm not selling Link to USD right now, but I'm saying like that would be what would reduce the risk the most because you can see it's higher than it is for Bitcoin and than it is for Ethereum. If you were buying Link, you would want to find, and if you wanted to buy Link and you wanted to figure out should you buy it with USD, Bitcoin, or Ethereum, you would want to see the one that has the lowest number. So for instance, let's say I want to go buy Link. Should I buy it with USD? The risk is almost 0.6. Probably not a good idea. Should I buy it with Bitcoin? Well, it's 0.562. Probably not necessarily the best idea. Ethereum actually looks a little bit more attractive. You can see that buying Link with Ethereum could carry some merit. It's below 0.5. And what could happen is if Link does not rally and Ethereum does rally, you could see this drop down, and it might create a good conversion opportunity of Ethereum to Link. Because, if the Ethereum valuation is going up and Link is not, and the Link Ether risk is going down, then by selling Ether to Link, you are reducing risk, or by buying Link with Ether. However, right now, I'm not selling any of my Ether. I'm letting it ride for a bit, and we'll talk about that a little bit more too. Now, for ADA, I've always said buying below 0.4 risk is theoretical accumulation. We said this in 2019, but back then accumulation stopped at 10 cents, which was 0.4 risk. Now you can see that 0.39 risk corresponds to 14 cents. So it has gone up a good bit. This is still in reaccumulation mode. In my opinion, as long as it's below 0.4, it's an accumulation mode. And actually, because Bitcoin risk and Ethereum risk have started shooting up, I will start buying some more ADA again. I am buying DOT as long as it's between $3 to $6, or if it goes below 3, I would buy it too. So as long as it's below $6. ADA, I would stop if it gets to 0.4. Okay, I would not buy it above 0.4, but now it could be a good opportunity to purchase some if you don't own any. By the way, I own all 5 of these assets. Okay, so this is all coming from the perspective of I already own these assets, and I more or less have the percentages how I want them. If I did not own any of these assets, I would buy some, even at these levels. Okay, and that might sound weird to some people, considering Bitcoin is at 0.6 and Ether is at 0.506, but in my opinion, it's too risky not to have them. So, I get a lot of questions from people saying, I don't have any Bitcoin or Ether. Should I come in now? Should I or should I DCA? Should I lump sum or DCA? A lot of times my response will be, it's and you guys, I'm sure a lot of you have heard it. It's generally a good idea if you don't own any, you can lump sum, but leave yourself the ability to continue DCAing in case it drops. But the reason why to lump sum is to just get that exposure, recognizing that it could go down in the short term, but it's, in my opinion, it's good to at least get the exposure rather than not having any. So I'm coming from this from the perspective of I already own these 5 coins. And because I already own Bitcoin and Ether, and we've been mostly accumulating those for a while, the risk levels have gone up. It's time to stop accumulating those for me. If you want, again, you can raise your risk tolerance to be higher than mine. I just like to tell you guys what I'm doing. I'm moderate risk. I stop at 0.5. With altcoins, I generally stop at 0.4 with the exception of Chainlink. Everything else, every other altcoin, I would stop at 0.4 risk. I just simply, it's not worth it to me. Altcoins have so much downside that it's not worth, in my opinion, accumulating them when they're much higher than 0.4. So I like to say Bitcoin, Ether, and Link, I'm okay accumulating up to 0.5 risk against USD. ADA, 0.4. Any of these, 0.4. These, you might think like, well, why are they so high? The risk confidence is 1. Take these with a grain of salt. Okay, take them with a grain of salt. The most interesting things about these coins is that the Ether risk is actually quite low compared to their historical data. And so if Ether does rally, and these don't, then that could be a decent conversion for people. I mean, for me, it probably would go to ADA, depending on what ADA is doing. It could go to Bitcoin if the Bitcoin risk drops back down. It might even go to Link. The Ethereum cell might go to Link, depending on what Link is doing. But I know a lot of you guys hold XTZ, Atom, and VeChain, so if Ethereum does rally and you're looking to pick up an altcoin, you might consider one of these 3 if those are your altcoins of choice. Again, they're not mine, but I recognize that other people have other choices. So Monero is a privacy hedge. I still own a small amount. It is a very, I showed you guys my portfolio percentages a few weeks ago for Bitcoin, Ethereum, Link, ADA, and DOT. Everything else in my portfolio that's not those 5 makes up less than 3% of my portfolio. Monero is less than 1%. The USD risk has still never reached 0.5 recently. If it does, I'll offload some. Until then, I'm just not even, I don't even really care. XRP and Litecoin, these are the 2 we said would wait until Bitcoin is close to the prior all-time high. We did a couple live streams recently saying, there's people probably trying to front run this move right now, hoping that Bitcoin is able to hold this level and continue on up. This will be the first time, as I said on live stream the last couple days, this would be the first time I could understand the justification for purchasing them, right? Am I purchasing them? No, I'm just simply not. And I know it's cool to see XRP rally to 46 cents from like 20 cents a few days ago, but you look at things like Link, and Link has gone up orders of magnitude over the last 3 years since Bitcoin. So don't forget ADA is up from around less than 2 cents in March. ADA was less than 2 cents in March, and now it's 14 cents. So yeah, XRP can rally, and it can print some candles. Let me tell you, it knows how to print candles when the time comes. But for me, I just don't want to go chase this, and I'm not going to lose any sleep over it anyways. Now, if Bitcoin rallies or if Bitcoin crashes, and these come back down. So if the stars align, which for me, the stars aligning would want to see these risk levels below 0.4 at the very least, would also want to see Bitcoin above its prior all-time high. If those things align, then I might buy some. Until then, bon voyage to the guys who own them. And again, I'm not saying they can't go up in value. They could. This could be the start of their rallies. And because I know a lot of you guys own these coins, I will try to cover them along the way. I just don't own them. I would rather focus on these coins because these coins have actually been overperforming Litecoin and XRP substantially over the last year. So they've substantially overperformed these, but it can, when you see these short-term moves, it's easy to forget kind of how far some of these other coins have come. I mean, remember, Link was less than $2 earlier this year, and now it's flirting with $15. Litecoin has not gone up 7x, 8x this year. right? XRP has not gone up, 7 or 8x this year. So it's just something to keep in mind. So I hope that explains the risk levels. That should theoretically explain the risk levels. Now, this is our short-term Bitcoin bubble risk. So when it gets above 100, I would say the bubble pop is imminent, at least short-term bubble. Doesn't mean macro bubble, at least short-term. But when you're getting into these areas, it's also very risky as well. And we have had several bubble pops that were in this range, right? If it's less than 0, we're bearish. Bitcoin is business as usual, between 0 to 25%, just a slow methodical move up. 25 to 50 heating up. We're in the risky range. So we recognize that if Bitcoin decides to all of a sudden cool off for a bit and crash a few $1,000, maybe not even call it crash, let's just call it a correction, it wouldn't be that surprising, right? It really would not be that surprising. Now, this down here shows you the daily moving averages and the weekly moving averages. It shows you the risk levels associated with those moving averages. Back when we had this a long time ago, this was more important because at one point these all said no, bull run necessary, but not sufficient conditions. So this is essentially saying just because we have these does not mean we will definitively have a bull market. But these three things need to happen in order for us to consider having a bull market. We have all three, right? Bitcoin above the 20-week, we have the golden cross, the 50-day going above the 200-day, and we have Bitcoin holding the 20-week moving average, which we did right here. So those were the three things that we needed to happen. Check, check, check. They've all happened. So this just shows if it's dynamic selling risk. So if you were conservative and you're selling between 0.4 to 0.5, it would be the total Bitcoin divided by 21. You can see they all say sell now. Again, this is just based on a linear selling approach. So if I were to fix this, it would just say total Bitcoin. This one for moderate between, it would actually be between 0.5. Let me go ahead and change this. So this would be between 0.5 and 0.6. So here we would have total Bitcoin divided by 15. And then for 0.6 to 0.7, we would have total Bitcoin divided by 10 if you're starting there. So you can see how they would vary depending on where you start. So if you start selling at 0.4 to 0.5, it'd be divided by 21. Here it'd be divided by 15. Here it would be divided by 10. If you go over on this, so if you go over to 0.6 to 0.7, it would be you're essentially just multiplying it. So it would be instead of 1/15th, it would be 2/15ths, etc. So I hope that explains why this is here. It's just to give you a gauge of what fraction to use depending on your risk tolerance. This just shows the grayscale premiums. So this is 20%, this is 48%. These just correspond to that premium, not whether you should buy Bitcoin. So in order for me to buy GBTC, I would first want to see the Bitcoin risk below 0.5, and then I would also want to see the premium below 25% at the very least. It would be better if it's between 0 to 10%. And so the reason why this is important is because if you're contributing to an IRA annually, you can contribute about $6,000 or so annually to an IRA. You have the whole year to do it, right? So you can always just figure out at some point in the year, hopefully there's a time when the premium is less than 10% and the risk of Bitcoin is less than 0.5. And at that point, that might be a decent time to go in. These strong buy sell does not correspond to the premium on Ethereum. Okay, these are different. There are some things with grayscale you need to be aware of. For instance, because you have to pay the premium, that's just something to consider. There are fees as well. Every time you trade, there is a fee. The nice part is you don't have to pay taxes on these trades, right? If you're doing it within the confines of an IRA, it's tax-free. I'm not a financial advisor. This is not financial advice to your own research, but if you're doing it within the confines of an IRA, it is tax-free, so that is the advantage of doing it. There's also another one that we're going to talk about in a few weeks, and I think some of you guys have already alluded to this, but we'll talk about another way that you can get exposure to Bitcoin and Ethereum and some other coins in a few weeks. So be on the lookout for that. So that should explain the first dashboard. So this is the main dashboard. Hopefully all of that makes sense. You can also go to this dashboard reference, which I haven't actually updated in a while, so I'll try to update that soon. But it gives you the general, like, what to make of these different things. If you go to the stock metal dashboard, I don't have risk levels for most of the things, but I buy stocks a lot, and I own more stock. I own more equities than crypto. I'm buying them as long as the risk is below 0.75, which is most of the time. Anytime it goes above 0.75, I stop buying stocks. Anytime it goes above zero point 0.8, I sell approximately 10%. I sold 10% a few weeks ago when it hit around 3,600, and then it crashed back down. And so I've been able to reallocate those. So if it comes back, if the risk goes back to zero point 0.8, then I would sell again. But a lot of times it'll just hover in this range for a long time. And so the idea is trying to figure out, okay, when is it really extended, and trying to take advantage of that. You can also see we have the Tesla risk, which is at zero point 0.8. Anytime it's above zero point 0.8, I'm not buying it, period. Honestly, I haven't been buying it at all recently anyways. I bought it for a few years. I have not bought it anytime recently. I did sell some Tesla a few weeks ago, but I still own some Tesla, and I certainly would not be buying it at 490. But if you see this go up to like 0.95 or something, I would probably sell some again. And then finally, we have gold. A lot of times I know a lot of people in crypto really like precious metals, and I think they can do well, but you also have to recognize that the risk-adjusted returns on precious metals are not that attractive. Yes, they've had some good runs, but over the grand scheme, equities tend to outperform. And so I would say if you're holding precious metals, it should be, if you're following this type of approach, it should be a rather small percentage of your portfolio. And for me, it's hard to justify holding too much precious metals over, say, crypto, right? I'd rather go with crypto than too many precious metals. With that said, I would never buy gold. We did a video on gold a few weeks ago. I would stick to it being less than 0.6. If it's less than 0.6, then you could justify buying some gold. Above 0.6, I think it's too risky in my opinion. We'll try to fill in the others as time goes on. If you go to the other tabs, you'll be able to see the actual interpolation tables that I use to give you these values. Okay, these are the interpolation tables, which I update at most, or at least once a week. A lot of times I'm updating them every other day, depending on what's going on in the market. But the first two columns show you a price and the corresponding risk level. And then this one shows you a risk with the corresponding price level. So here it denotes it in nice round numbers, as well as here it just does it in denominations of risk. So you can see, for instance, the risk on Bitcoin at 0.6 is 17.8, at 0.625 it's 19K, at 0.65 it's 20.2K, and so on and so forth. Theoretically speaking, the instantaneous top, according to the risk metric, would be around $42,000. So if Bitcoin were to go to $42,000 today, I would consider that the theoretical top. These adjust over time, so as we continue marching through time, these numbers will adjust upwards as well. I've also added on to this one some other currency conversions as well. And then we also have you can see on this tab, the price, the prices corresponding to these different daily moving averages and weekly moving averages. And then this over here just gives you the conversions between USD and the different currencies that I have on here. We also have the same, we don't have all the currencies yet for Ethereum, but you can see similar stuff for Ethereum, the interpolation tables, same thing with Link against Bitcoin and Ether, etc., etc. If you scroll over, you can see the S&P 500 risk metric, and it goes all the way back to the Great Depression, and you can see how few times we get above 0.8 risk, which is why I think taking profits when we get above 0.8 typically is a good thing. We also have the fair market value fit, which I update approximately every 2 weeks. Okay, so this gives you the total cryptocurrency market cap, the red line, which is a fair value regression fit, and then the undervaluation line and overvaluation line. So currently we're overvalued. Actually, this is outdated. You can see the last time I updated it was November 15th. I'll update it again in about a week from today. And if things stay like they are now, it'll be even more overvalued. But you can see where for the last couple years, we've been tracking the fair valuation line. Like we've gone under it, above it, under it, above it, a little under, a little above, We've been following this fair valuation line for the last couple years. That will wrap it up for the risk stuff. Now, if you wanna get an idea of various selling strategies, one thing you can do is come to the dynamic DCA strategy dashboard. And if you go to the Bitcoin dynamic DCA, we have a place where you can put in the total number of Bitcoin you have. I can't tell who you guys are. Obviously, it's all anonymous. You can also just make it up, right? Let's just say you have 10 Bitcoin or something, and you think the projected peak is 100K. Let's keep it simple. Then you can look over here to see what, depending on what risk level your risk tolerance, what might your profit, or what might what if you sell it to USD, how much USD would you ultimately have? This is cumulative. So for instance, if you have a conservative strategy and you sell at 0.4 and then continue on selling at 0.5, it's 44.7K at 0.5 and at had you sold at 0.4. So this value equals what you would have made selling here and here, and so on and so forth. So if you were conservative, by the time you reach 0.9 risk, theoretically 377K. For moderate, theoretically 433K if you reach the top. But the other thing is it shows what you potentially leave on the table if you make your risk tolerance too high. For instance, if you go with the YOLO approach, the you only live once approach, and only sell at the 0.9 risk band, that would be obviously the best because you're selling everything at the top, and you would get 774,000 extrapolated, somewhat a dubious of extrapolation. But what if it only makes it to 0.8 risk and goes back down? Then you didn't sell anything. So it gives you an idea of your the various risk tolerances that you could have and what you could theoretically leave on the table if it doesn't hit that risk. This is for selling the same percentage at each risk level. This is the linear one, which is the one I use, which is in my opinion, I think it's better than selling the same percentage because we want to squeeze out the profits and sell more and more as we get higher and higher. We don't want to sell a substantial amount of our crypto at a low risk level. And then this one's exponential, which I think is really dangerous because it essentially leaves most of the cells at the end. For instance, if you were to do a linear extrapolation, then say by 0.7 risk, you've already made 133K. By 0.7 risk for exponential, it's only 73K. The difference is that if it makes it up to these final risk bands for exponential, this one would outperform linear. You can see 610 versus 489. This is the same thing as these, except this is selling at the middle of the risk bands rather than the beginning of the risk bands. So slightly different approach. Same thing applies for Ethereum. You can do the same thing for Ethereum. You could put in the amount of Ethereum you have. Let's suppose you have 32, and let's suppose the future peak is, let's say, $7,000. You can figure out the different theoretical amounts of money you would be selling it for if you were to follow the various approaches. Okay, there's also some other things on this as well. There is the weighted risk tab. So in this tab, you can put in how much. Let's say you have a portfolio of Bella, Bitcoin, Ethereum, Link, and ADA. Let's say you have 3 Bitcoin, 200 ETH. Let's say you're really heavy on ETH. I know a lot of you guys are. Let's say you have 1,000 Link and maybe 100,000 ADA or something like that, and that's your portfolio. This will tell you your weighted risk on the market. So it might seem like, okay, well, what's the point? I mean, a few months ago, this would have been a lot lower. And at some point, if you have these 4 coins and you come over here and you figure out what your weighted risk is and you see it flashing at like 0.95, that should be an alert, right? That should be a red flag. For now, we're still somewhat playing in the sandbox. And this one, instead of putting in the amounts, you can just put in the percentage you own. So let's say you have 50% Bitcoin, 25% Ethereum, and then let's say 15% Link and 10% ADA. I'm putting them in as percentages here. So I need to fix this. I think I have to do it like 0.5 or something. Actually, I don't know. I'll have to see what's going on here because it looks like the percentage sum is averaging up to a lot higher. So I'll figure out what's going on here. Let me just quickly see if I change this to 50. Let me delete these. Okay, yeah, so it's probably something with those. So if you just say change it to say 50 and 50, it should add to 100. So the reason it's showing the wrong weighted risk is because something's wrong with the actual percentage formula. So I'll fix that after I finish this video. And then this one just shows you if you have other assets as well. And it has divided by zeros because they're all 0. So I hope that makes sense. I will fix this one in a few minutes. And then also remember, you can always find all the premium videos. Here's the list of all the premium videos. I post it regularly in the emails and on the Telegram alerts and on Patreon. So these show you all the premium videos. You can go back and watch those. You also, I think that's a big recap already. But let's look at the markets. Bitcoin's at 18.5. Ethereum was doing well earlier. Let's see where it is now. It's still doing pretty well. It's at 567. We've anticipated this theoretical bounce for Ethereum against Bitcoin. Is it clear that it's going to continue? Not yet, right? It's too early to call. Historically speaking, the move tends to happen in mid-December, sometimes in early January. Maybe this one will happen in late November. But we've been hoping and anticipating a move here of Ethereum against Bitcoin, and it looks like there's at least a decent probability that it starts happening. And I would caution people, the risk levels for Ethereum. If you look at the risk value at 0.5, it's 554. We're already above 554. I'm not selling yet. And maybe that will turn out to be a bad thing if Bitcoin strongly corrects. But right now, given the market conditions, given that Bitcoin's like 60% above its 20-week moving average, and kind of seeing that Ethereum is lagging behind Bitcoin, I'm still going to sell within the 0.5 to 0.6 risk band, 1/10 of my Ethereum, but I'm not going to do it yet. And I think setting a stop loss right now at 554 is probably not a wise idea, because there can be a wick down, and I don't want to get liquidated this early. So I'm gonna push it here and let it come up the risk bands a little bit more before trying to take any profits there. And again, these values will go up as we continue on. So by the time we get to 0.6 risk, this could be $950. Okay, so if you want to be more risk averse than I'm being, then you could just take profits now, and it would just be 1/10 of your Ether, and you could take it out to another coin or fiat. I just am choosing to try to push it up a little bit higher, and we'll see where we get to before I maybe put in a stop loss. But I'm not doing anything yet, and I would not want to put in a stop loss right now, because I don't want to get liquidated during, say, like a daily negative 10% candle that can easily come back and correct itself. So, but I will still sell 1/10 at somewhere between this band, as long as we don't just completely go back down now. And the reason is because I say a lot of times it's good to have a gray region between where you buy and sell. I just bought Ethereum like 2 days ago, and I don't want to like sell it today, and then if it drops below 0.5 risk this week, and buy it back. So sometimes it's good to have a little bit of a gray region here where you don't buy or sell. Give yourself some wiggle room. If you're concerned about taxes, remember you can trade it within the confines of an IRA. But again, there are limitations to how much you can trade within there, because it's based on annual contributions. But because we're doing a linear extrapolation or a linear scaling, it is only 1/10. So there's a chance that 1/10 of your Ethereum portfolio could be in say like an IRA or something, because it's only 1/10. So if you're new, when we were over here, we focused heavily on accumulating Bitcoin, because whether Bitcoin held the 20-week, alts would bleed. Whether it went super high up, alts would bleed. And if it went down, alts would bleed. So when it was testing the 20-week, it's typically the time to accumulate Bitcoin. We stopped accumulating it when it went above 0.5 risk, which was around this point. I sold to Ether, and I've been continuing to sell through Ether. Most recently, I did sell some Bitcoin at 18.9, right there at the top, the local top, right? We could easily blast past it. I did sell a little bit of Bitcoin at the local top that corresponded, that actually went to stable coins. And that basically has gone to my dry powder, so to speak, of money on the sidelines that I can use to DCA into the market as I see fit. But I did take that one to stablecoins, but I had been mostly getting Ethereum. And then when we were up in this region and the risk on Bitcoin was high, I was only accumulating Ethereum for the most part, and a little bit of Polkadot. So Ethereum and DOT have been the main two coins I've been accumulating. Now that Ethereum has rallied, and Ethereum has gone above 0.5 risk, which is around here, I'm no longer buying Ethereum. So you can see we try to time these subtle momentum shifts in the market, and this is also great even if you don't swing trade. If you don't swing trade, you can use the risk values to figure out what to accumulate. For instance, when it was over here, you're not necessarily selling, but maybe you just stopped accumulating Bitcoin here and you started focusing on Ethereum. Now that Ethereum has rallied, now you can stop focusing on Ethereum and maybe focus on an altcoin or a different asset class. Gasp, right? That there's other asset classes, but that's there's other things you could focus on now that we've rallied. But what I'm looking for now is I'm looking for to see if we're going to have another Ethereum rally against Bitcoin over the next few months, and if we do, and we see the risk of Ether get back to say zero point 0.6, then I would certainly take some profits, either back to Bitcoin or it depends on what the risk levels are at the time, so I can't fully know. But if it gets to 0.6, that would be a ratio of around 0.0435. At the current Bitcoin price, that puts it around $800. So if it gets to that point, I rest assured I will be taking profits. I might take profits before then, but I definitely would take profits at that point, corresponding to 1/10 of my Ether, because we're still somewhat playing in the sandbox, even at these risk levels. The other thing we'll talk about is we've looked at ADA a good bit. It's had a pretty good candle here. It's now at around 15 cents. I would not buy it if it goes above a 0.4 risk level. So if you see it going above it's at 0.4 now. So as long as it's above 0.4, I would not buy ADA. I already do have a stack of it. If you're looking to get in, 0.401, you could still buy some even at this risk level. And I don't think it's going to be that big of a deal, but I would not buy it too much higher than this level, right? 0.401 is basically the top for buying ADA. I would not get too risky here. I'll buy DOT up to $6. So keep an eye on ADA, because I do have a decent amount of ADA. When ADA made its move earlier in the year, remember I sold it up here to Ether at 235, and then we saw the Ether rally. And I also sold Link to Ether at that point, and we saw Ethereum rally. And then later we sold Link to Bitcoin, which was really great. When Link went to $20, the last sell went to Bitcoin when Link was $18.50, which turned out to be a very good move. So it's funny because I literally was just saying I'll start picking up some ADA now because we no more Ethereum and Bitcoin. So keep an eye on this risk level. And again, if you don't own any ADA and you're wanting to get in, 0.4 risk is still somewhat low. But remember, I would not go in too much higher than 0.4 risk in terms of accumulating altcoins. But we will see where ADA takes us. It's pretty much been sitting still for a while, but don't forget how far it has come. A lot of people forget that it rallied from the bottom of the wick. It rallied 900% or so. From the bottom of the candle to this candle, it rallied almost 500%. So don't forget what ADA has done. I think it's a good hedge against Ethereum, but my ADA percentage is only a few percentage. I think I don't remember exactly what it is. It's probably around 4% right now, maybe 5%. I would never let it go above 7% or somewhere in that range. So keep an eye out on ADA. This could be, with it being at 0.4 risk, this is around the theoretical top. And if you're wondering if you don't have any ADA and you're wondering, oh, it's at 0.401, I wouldn't really worry too much about a decimal. This is a 1/1000th. It's still 0.4 risk. This is still a theoretical buy in the grand scheme. So this is what I will buy, and Polkadot. These will be the main two. Right now, I'll buy Link again if the risk on USD comes back to 0.5. There is a chance that I might break this if Ether rallies and Link does not. When I sell Ether, there's a chance I might sell it to Link. We'll see what happens. But I do own about 12% of my portfolio is in Chainlink. So this Link is one I've said is too risky not to hold. If you're following my approach, Bitcoin, Ethereum, and Link are the main three. After that, ADA. After that, DOT. If you don't like these two coins, you could substitute it with your altcoins of choice. Maybe it's VeChain, maybe it's Tezos, maybe it's Atom. maybe it's XRP, maybe it's Litecoin. Whatever it is, you can substitute it and follow a similar strategy as me, but maybe you just have a different altcoin that you prefer. Link Bitcoin, you can see it's getting pretty low on the Bitcoin valuation. We've been here before around 25, or this one was around 45% down, but we're around 12%, or sorry, let me fix that to the actual 20-week. So around 20% down right now. Has it happened before? Yes, it has. We've had plenty of times where it's down 20% against Bitcoin's 20-week, the bull market support. We might see a turnaround point here soon for Chainlink, so keep an eye on that. If you don't own any, it's too risky not to hold, in my opinion. If you look at, let's look at some of these charts really quick. This shows you the Link Bitcoin valuation. The red data points are what I consider non-bubble data. This is an exponential fit. This is what it looks like on a log scale. We're in the theoretical reaccumulation zone. So if you're taking profits on Bitcoin at any point and you're wondering what to put it in and you don't own any Chainlink, this is a theoretical reaccumulation zone of Link against Bitcoin. Here it is in a log scale. This is the Bitcoin risk metric. Okay, this, and I'll probably do a public video on this in a fairly soon because it's been a while. You can see we've had similar moves. You know, this is our theoretical tops. This one was short-lived. We're basically almost where we were last time in 2019, but you can see the price is higher. This is because the risk levels are dynamic. They change over time. And you can see that this was a great buying opportunity. If you guys were in the premium list at this point, we were going crazy in the chat. The risk reached 0.12. At that data point, it reached 0.12. What a great opportunity it was. If it happens again, we're not going to run for the hills. This will be a buying opportunity. But for now, we're getting a little bit overheated. And you can see in the past, you know, what more or less has happened. If you put it on if you take the risk out and put it on the secondary y-axis, you can see at 0.5, once the bull market, I mean, there's been several times where it holds 0.5 as resistance, right? Several times that happens. Last year, we went up to around 0.645 risk. Right now, we're actually lower. We're lower than that. This is clearly not updated. It's not updated by a few days because you can see the risk level is still below 0.6. But you guys get the idea, right? This was a chart I printed like a week ago or so. The updated one will be in the newsletter, and I'll post it in the alerts channel as well. But we reached around 0.645 last time. Right now we're just over 0.6. And remember, you can also shift this up to be, say, 0.6 if you want, in terms of buying down here and selling up here. Or you can make it so that once you get to 0.5, you stop buying, and once you get to 0.6, you start selling. You can see that during the bull market at 0.5, we did come back down to it once last cycle. So we had several points where we came up to it and back down to the 0.5 risk level and back down. Here was an example where we went up to 0.7 risk and then dropped back down to less than 0.5. After that, the last few months of the cycle, it did not go back below 0.5. But again, you could argue that you want to keep throwing money into the market. We don't know where the peak is, and at some point, it would be good to just take it out and put it into stable coins or fiat and preserve the wealth rather than continue to risk it on crypto. But again, the beauty of it is you can always adjust what your risk levels are. And remember, if these are the general buying levels, this is the dynamic DCA. So Y at this point, 2Y, 3Y, 4Y, and 5Y. So I already sold Y here. It went to Ethereum. We know that this is outdated slightly, so we're slightly up here. This one I'm splitting up into 4 separate chunks. So 2Y, which would be 2/15ths of my portfolio, I'm splitting it into 4 chunks within this band just to squeeze out the profits as we continue to go up. The next one, I just did one at 18.9. I think a lot of you guys followed suit. I went to stable coins. Now I'll just use that to accumulate other things. And if the next risk band would be 0.625, or sorry, 0.65 and 0.675. So it's 0.6, 0.625, 0.65, and 0.675. Those would be the four levels that I'm looking to take profits at. And if you go back and look at the risk dashboard for Bitcoin, you can see that 0.6 is 17.8, 0.625 is 19K now, 0.65 is a little over 20, 0.675 is 21.5. So if we traverse all of these, I will have officially sold 2/15 of my Bitcoin during that risk span, and if we get up here, the multiple is 3. So then it would be 3/15, and then divided by 4 for each sell if you sell it every step of the way. But remember, again, these risk levels are dynamic. ADA ETH is starting to come back a little bit here. Again, we'll see what Ethereum does. Ethereum certainly is a not as risky of a play as ADA, and ADA is now at around 14 cents. So again, as I said, this could be because the price of Bitcoin, the risk of Bitcoin and Ether are both well over 0.5. This might be a good time, as I said, to pick up some ADA, pick up some DOT. If you don't like those, you could pick up some of these other ones if you're feeling especially adventurous. But again, I would say for Bitcoin and Ethereum, the risk is too high at this point, and we've already been accumulating them for weeks now. So at this point, I would say I'm just gonna let it ride and see what happens, and bite off a little bit more risk in some of the other cryptos in the market that we haven't been focusing on for a while, because we haven't really focused on purchasing ADA. I haven't bought ADA in months, right? I mean, once it went above 10 cents, I have not bought it in months. The only time I bought it was one time, and that was a few weeks ago. I sold some Bitcoin to Ether and ADA. So I think some of you guys remember that. It mostly went to Ethereum. Some of it went to ADA. And so I'm happy with my ADA position. I will accumulate a little bit more, that it's at 0.4 risk now. But we'll keep an eye on the altcoin market as especially as Ether makes a move. Ether is the index of the altcoin market. There's no justification in the same way that you should justify holding Ether because it outperforms Bitcoin. You should justify holding altcoins because they outperform Ether. Okay, and ADA ETH is starting. I mean, this is a nice candle here. I don't know if it's going to stay. I'm not converting Ether to ADA right now, but I would say, okay, it's a decent time to pick up some more ADA in the grand scheme of a market cycle. If you look at the major coins, the main ones we follow: Bitcoin, Ethereum, Chainlink, and ADA, and Polkadot. Litecoin and XRP are the two that I would say, they're very risky. They tend to not move substantially until Bitcoin gets to the prior all-time high. I imagine they're moving now because people are trying to front run that idea. If you're okay taking on that risk, it could work out well, but just recognize the risk that comes with purchasing them. You could get the local bottom very well if you had been purchasing the last few days, but if Bitcoin corrects here, then it could be a few more months before they start to rally. So keep your eyes on them. I don't own them, but I can understand why you might want to speculate on them. We don't follow Bitcoin Cash here, so we somewhat talk about we talked about Binance Coin a little bit, but not too much. BSV, no thank you. And you can see down the chain we go here. Atom is one I would say keep an eye out this market cycle. I would prefer ADA personally, but Atom is one that I could understand getting. I understand people getting a position in, as well as VeChain. So Atom and VeChain, and some of you guys own Tezos as well. As I've said before, I'm not as bullish on Tezos as I would be for coins like ADA, but I do know that some of you guys hold it. The reason is, I mean, the Tezos Ether chart looks pretty bad, right? I mean, this is the Link Ether chart. It looks amazing. And then you go look at the Tezos Ether chart, and that's what it looks like, right? So Link, I would say, is king of the altcoins. The main ones I focus on: Bitcoin, Ethereum, Link, ADA, and DOT. Bella, DOT for short. So hopefully this has been a good recap. I think I've mostly covered everything. Someone asked about how much money you should have on the sidelines. It really depends, right? At this point, I slightly increased it because I sold my Bitcoin to stablecoins not too long ago. When Bitcoin, I would say when Bitcoin is 60% above the 20-week moving average, and if altcoins are booming and Ethereum is booming, and you decide to start taking profits, you might consider taking some of those profits at some point back to fiat or stable coins, because there will be a correction at some point, and that way you can reaccumulate it at that stage. If you see the price of Bitcoin go back to the 20-week, then I would be more aggressive in getting your money into the market, right? So when it's far away from the 20-week, you might consider slowly building your dry powder stack. When it gets close to the 20-week, at that point, you might consider pushing more of it in and taking on a bit more risk with it, in lieu of the idea that if we are in a bull market, then there's a good chance that we will hold the 20-week moving average as support like we did last market cycle and like we've started to do this market cycle. This shows the regression bands. You can see we have popped our head above it. This is no man's land up here. This is smart money coming in, right? If you're buying up here, it's not smart money, in my opinion. This is not smart money, just like it wasn't over here. It's called gambling. You don't need crypto to do that. If you want to do it, you can use it. You can use crypto as a means to gamble. But again, this is the smart money. This is just pure speculation up here. This is an investment. This is a gamble, right? Investment, gamble, investment. We're back to gamble phase. I don't know how high we're going to go, but no, I don't think smart money is buying at this point. And if we put on our rainbow, our regression rainbow, yeah, I'm not saying we're going to hold this level as resistance, but you can see last market cycle within our regression rainbow that shows you the various bands here. Let me just delete these. We were essentially, you know, in this band for over 2 years. Okay, and so far this cycle we haven't respected it as much. But, you know, you can see we have been in it for a decent amount of time. We did come up one band earlier in 2019, and we came down to this band in March, which, by the way, this capitulation was more impressive than this one, even though this one was at a lower price, because the fair value of Bitcoin was higher 14 months later or whatever, or, you know, whatever it was exactly 13 months later. But we came down a full another regression band. So this was a more important capitulation, I think, than this one was. Because even though the price was higher at this point than it was over here, we were actually further down with respect to its fair value. So I think we've probably covered enough. I wanted to do a full recap video. It looks like ADA is starting to take off a little bit. So just keep that in mind. 0.4 risk. This is probably the last chance, in my opinion, to get on board with ADA if you don't own any. And by the way, I shouldn't say last chance, right? There's going to be plenty of times during the cycle where the ADA risk is probably less than 0.4. I'm just saying that if you don't own any and you're wanting to accumulate some, I would not accumulate it much higher than 0.4 risk. I would get your stack, whatever you want, and let it ride past that. I would not be chasing this up to 0.5. Obviously, if you have a higher risk tolerance than me, you could chase it a little higher than 0.4. You could chase it to 0.425 or 0.45. That'll get you closer to 20 cents. But I would not chase it too much after that. So keep that in mind. I'm gonna be focusing now on picking up some ADA and Polkadot, letting Bitcoin and Ethereum ride, and depending on how the market cycle plays out, we will take profits along the way. In the event of a dump, in the event of a Bitcoin dump, these will bleed. It's a risk you can take or choose not to take. It's just simply a calculated risk. And if Bitcoin does dump, rest assured these will probably dump harder. However, if it slowly bleeds or has a correction, but let's take Bitcoin as like a 10% correction, these will correct slightly harder, but because of Bitcoin's proximity or still continued distance from the 20-week moving average, I still contend that these coins could still recover quickly. So I think the risk on accumulating some of these altcoins right now is a lot lower than it was when Bitcoin was testing the 20-week. And of course, given the idea that Bitcoin could correct back down, you might consider having some money on the sidelines like me. That's why my last Bitcoin sell, which was a substantial amount for me, went to stable coins so that I can, in the event of a correction, we can try to accumulate more. But if you are wanting to establish a position in some of these altcoins, it makes a little bit more sense given where Bitcoin is. But just recognize that if we test the 20-week, then these will likely go down. But this is the same thing every cycle, right? I mean, this is there's no free lunch, right? If you want to see the return, you have to take the risk, and part of that risk entails Bitcoin staying healthy. So if Bitcoin stays healthy, we're cooking. If it doesn't, it's going to be a setback in the short term. I still think over the macro scale, the main 5 that I look at are going to do quite well. I can't make any claims for the other ones, but I think these 5 for me will do quite well over the next few years, and so we will continue to keep tabs on that. I've rambled long enough. I hope you guys enjoyed the video. And if you guys have any questions, you can put them in the Telegram chat or in the video, and I'll try to get to them. Let me know what you guys think about the recap, and I will see you next time. Bye.